Welcome to my channel. I'm Dr. Romano. Have you ever wondered how much income does a hedge fund manager make for themselves? In this video, I'm going to share with you exactly how much they make and how much you could make if you have a passion for trading. And why haven't you started your own hedge fund? Before we continue the video, please remember to subscribe to my channel and do thumbs up. It's right there, both buttons. Just press it. It doesn't hurt to help, but that will really help me out. You're going to get my videos anyway. However, at least I get credit for it. Thank you so much. A hedge fund is an investment company. That is the correct term for it. However, somehow in the 1960s, the term hedge fund was coiled with a particular company that at that time they were hedging their positions. However, today, not all hedge funds are using a hedge strategy. So as you know what a hedge fund is, an investment company, whereas an investment bank has multiple specializations. A hedge fund has one type of focus, and that is trading, whether it's stocks, bonds, commodities, assets, real estate, whatever, portfolios of mortgages, you name it, and that's what they focus on. This is one reason that a hedge fund is far more superior to become a client at than an investment bank. You're dealing with the owner of the company when you go and invest money at that hedge fund. Now, of course, you wouldn't want to invest all your assets in one hedge fund. You should really only focus on not even 5% of your assets in one hedge fund. In other videos, I talked about why that's so important, diversification. If you start to trade and you feel that you're capable of making a really good return in the different type of market conditions, then you could establish your own hedge fund. And the first step of doing that is finding a company that will help you establish a hedge fund. It does cost money. And depending on how much and where you're situated and how much you're going to put into the fund, it could be $12,000, it could be $20,000. It just depends who you're actually hiring. And so it's your job to do your due diligence on finding the best company for the lowest price. Because you have to remember, what they will be creating for you is the PPM documents, the fact sheet, etc. All those legal documents that you need to show investors. And they will also create, if you want, the 2 LLCs and the LP in Delaware. Delaware is the only place that you should be establishing that. You could stay in the state that you are in, and you're going to generate an income. You should focus on being in a state that has no state income tax, no city tax. So Florida, Wyoming, Texas, Nevada, Washington, and the list goes on, because by doing that, you are saving a good 5 to 10, 15% a year in taxes. And another thing, you could lower your tax rate is by creating a private foundation in Liechtenstein. Private foundations in Liechtenstein don't charge income tax to foreigners. So since you are a foreigner and you have an entity in their country, they don't charge income tax. So the entity, which is a private foundation in Liechtenstein, would not pay income tax. I don't know the situation here in America with that type of entity, whether they would pay tax or not, but I'm not an accountant, I'm a doctor of finance. So that's something that you have to research. However, I highly suggest you research it because you're going to be very happy with the outcome. Now, once you've established your hedge fund, and it takes around 3 to 4 months, maybe longer, to get approved, now you actually have an entity to start raising capital. And your job would be to go to very wealthy people. Don't focus on the the people that are in the industry, because they are going to ask a lot of questions, and unfortunately you may not be able to answer them because it's a learning curve. So in the beginning, I would actually go to the typical investor who has a lot of money to put up that $2 million minimum. And then once you get 20 to 50 million and you have 25 clients at a minimum of $2 million or so, whatever that minimum is, based on the state that you live in and their legal restrictions, then you could go to those big endowments, those big companies such as the investment banks and so forth, and then you'd be better equipped at answering their questions. Because you have to remember, just because people have made money, they're not always equipped with investing in a different type of asset they're not used to. When they're doing real estate and they're investing in real estate, of course they know how to look at an investment. But a hedge fund investment is very different. And that's something that you should think about. And I'll be making another video on how to market a hedge fund as well, and how to find clients. So now you raise capital, right? But since you've raised, let's say, $1 billion of AUM, assets under management, how much you're going to make from that? Well, if you've done a 30% return, okay, in 2020, a 20% return is actually really low in that type of market. You should have been doing at least 50% and higher. But of course, it depends other reasons to your strategy. Maybe it doesn't have that. Maybe you're investing in assets that are a little lower, or they're not the equities market. I highly suggest that the equities market is the best market to have an investment in, because it's so volatile and it has a lot of depth to it, meaning there's a lot of people now that are trading in the equities market, whereas the cryptocurrency market, it's such a new market, we don't have a lot of data to analyze from that market because it's only now that it has collapsed. So that's probably considered one market cycle. And to focus on, you have raised $1 billion and you do a 30% return, you get to keep 20% of the returns that you generate. So 20% or 22%, it depends what you start charging. Of course, in the beginning, you're not going to charge 22%. You're probably going to charge 20% of the returns. And of course, you're going to charge fees on the total capital that the hedge fund investor puts into the fund. And so that could be 2%, whatever it is. So 2% of $1 billion should pay for your administrator, your office expenses, the hedge fund accountant. You also have to pay companies that will help you market your hedge fund. There's companies now that specialize in hedge fund marketing, and they do a certain, they know a lot of connections, etc. And of course, you have to pay for office space because you don't want to trade at home, right? You want to be in the office to be a little more serious. When you're at home, you have your kids, wife, husband, whatever, and it's a distraction. It's not healthy. Secondly, psychologically, you should be in the office when you're trading because you're mentally prepared to work. When you're trading in your bedroom, subconsciously, you're mentally ready to sleep. That's what you do in the bedroom. So be very, very wise. Don't trade in your living room or your apartment or your house. Actually get an office. Even if it's a tiny little office, 10 by 10, whatever it is. It's very important. Based on the 2% of $1 billion, if it's $1 billion AUM and you made 30% returns, you take 20% of that. That's $300 million that you made for your clients, and you get to keep 20% of that. So on $1 billion, you do 30%. You get to keep 20% of that 30%. So the $300 million that you created, 20% of that is roughly $60 million. And that's a lot, $60 million. So you'll make $60 million a year from a 30% return. But what happens for those hedge funds that did 100% in 2020? They made $1 billion. Is that incredible for their clients? And so they keep, that's enormous amount of money. That's almost $200 million that some of these hedge funds managers personally made. And of course, if you give 30% of that income to your private foundation, you're not paying tax on that because you gave it away to your own private foundation. So you reduce your taxes to 11, the total reduction, whatever the total federal tax rate, by dumping it into a private foundation, you've reduced your taxes by, I believe it's around 11.5%. I'm not exactly sure, but you do the math. And when you get to $10 billion of AUM, you have 10 hedge funds. Now, of course, I highly suggest that you try not to take too much control. If you're funding another hedge fund, let that trader be the owner and manage everything. You become the investor, and since you're the first investor, you get a discount on the returns. So you could take your 200 million that you made, or 60 million, whatever it is, and you could start that way. Thank you so much for watching my video. Please remember to subscribe to my channel. It's right there. Do thumbs up, press that button. It doesn't hurt, but that will really help me out. Thank you so much.